Most traders lose money not because they don't know the setup, but because they have no idea when not to take a trade. Today I'm going to be live trading and you'll see what I took before I enter, what I thought in the moment, and also how we are going to be managing the trade. Because most people believe, okay, we're just going to be taking a trade and that's it. No, that is only half of the story. You have to be able to read the price action and also manage your trade. Now, we're also going to be talking about discipline as a whole in this one. So first things first, we are on the 50-minute time frame. This was the last trade that we have taken in the last episode, and quite frankly, I've seen some people on other social media platforms, they have said, you closed the trade early. Well, no, I did not close a trade early. I closed a trade at the exact same time as I was supposed to trade it, or basically close it in. Because I closed it somewhere in here. I was going for a 1-4-1. If we're going to go into the 1-minute time frame, let me just check it out. It was like this. We've taken the trade onto the upside, then from here on, stop loss below in here, and we've closed the trade basically at our 1-4-1. It was approximately in here. And some traders was like here. Now some traders are going to be saying, nah man, you closed the trade early because you only gone for 1-4-1. No, if I would have held it all the way to the high time frame bias, which is going to be that line, well then guess what would have happened? This wouldn't have been a loss anyways, because we would have gotten out at a break even. But would you really want that? Or to, like a question to you in that sense, would you rather have a 1-4-1 win or a loss, or even having a 1-4 win and a break-even trade? I mean, pretty logical to me what I would take any day of the week. But more importantly, what do we have going on right now? Currently, we are trading onto the upside, and if we're going to go onto the daily time frame, I've already shown to you that most likely we are just going to be continuing our movement onto the upside. And the reason for that is going to be mainly those relative equal highs, and what I've not mentioned in the previous episode, which was basically yesterday, we are also going to be having this gap. I'm going to be marking it out gap, but this is going to be on the daily, okay? We want to trade into the gaps. Why? And some of you are just going to be saying, well, we have already traded into the gap. What are you talking about? This is the wrong approach. This is not how I'm operating. The reason for that is very simple, because we have not traded into it with a body closure. Okay, as long as we have not done that, I'm still looking out for more opportunities to trade higher. Going more recently on to the 50-minute time frame, we want to ask ourselves, are we going to continue higher or lower? What we can already spot is that this is going to be our range low. Okay, I mean, no doubt. This is the range low, but the question is, are we going to continue our movement on to the upside or to the downside? Now we're going to be determining that based off internal structure. Let's go into the 4-hour time frame. What is going to be the most recent point that we could trade into? It's going to be this entire FEG, and this is going to be on the 4-hour time frame. This could be our potential target, and we are already starting to see some movement onto the upside. So let me quickly check. Yes, we are past A30. What do we want to see, guys? Okay, let's make a quick checklist for everybody so you can actually see what's up. Okay, we're going to be doing it in a different color. So step one is going to be, we need our higher time frame bias. Okay, now the higher time frame bias, in that case, what is it going to be? Well, the 4-hour FEG. That's going to be the target for the session. Okay, not only the target for, I don't know, 4 days or whatsoever, it is pretty much only going to be for the session. So the next one is going to be, okay, once we have identified that, we want to determine our range high and low. Okay, now we actually have a point where to base a trade off from, because now we know that is basically a 50-50. Okay, it's a 50-50 chance whether we're going to go for the low or for the high. In that case, this is going to be more of a niche example. Keep that in mind. I'll be continuing the list in just a second. Sometimes you're going to be having price action like this one. And here it's more obvious to tell, okay, this is going to be our range high. This is going to be our range low. Here it's like way more obvious to tell, because now you're basically having a very recent swing low and also a very recent swing high. Okay, and then you're going to be deciding your 50-50 scenario basically, and then you're going to be saying, okay, it's going to be that low or that high. But other times you're going to be having a situation like this one, where, just like in here, we're trading onto the downside, creating our low, and then right now, this is where we are at right now, okay? In that case, you could be saying, okay, this is going to be our high, and this is going to be our low. This is a valid point. Problem with that though is going to be that you are very close by. So even if you're going to be taking a trade, yes, you might win the trade, but the risk reward is not going to be great. So although this is still a 50-50 scenario, it is obvious that we're just going to go on to the upside, which is good to know. But once again, you're not having enough movement. So that's why you would rather want to have, so I'm basically simplifying everything that we have on a chart right now. You're going to be having your POY. Our POY right now in that scenario is going to be the 4-hour FEG. Okay. This is basically then going to be creating your new range high, and all of a sudden you're not basically that close anymore. Okay, if we're going to be marking out like this, now you have real movement to basically trade higher into. Okay, now it's not anymore something that is too far away. Now you have actually a level. Okay, this is going to be enough pips for that day, and let's just say you're going to be taking it something like this. Okay, it's going to be enough, and you're done for the day. This is exactly what I will do with you live right now. Okay, I've explained it to you very simple. Now we have our higher time frame bias, we have our range high and low. What is going to be the next step? The next step is going to be that we need internal liquidity being taken out. Okay, now what is that going to mean? We drop down onto the 1 minute time frame and we want to see a low being swept. This can be any low, but the only criteria for that is going to be it has to happen past 8:30. If it's not going to be past 8:30, then it won't really work, and you'll just scratching your head when you're going to be backtesting this and asking, why didn't this work out? Well, very simple, because you need to watch out for every single key component of my strategy. From this point on, you're going to be taking out the low, basically. This will be a potential low. This could also be this one, this one, this one, this one, doesn't matter. And then what do we want to see? Now we go back to our list. There we go. We now want to ask ourselves, okay, what's the 4? We want to see movement. Yeah, this is pretty much already it. We have 4 steps that we want to basically look into. And if I had to rate them on a scale from 1 to 10, what is going to be the hardest and what is going to be the easiest, then I am going to say that basically the higher time frame, this is on a scale from 1 to 10, how easy or hard is it? So 10 is the hardest, 1 is the easiest. I would say that the higher time frame bias is not that hard. Okay, I would give it a 3. Now the range high or low though, okay, let me make it like that, 3 out of 10. The range high or low though is going to be very important. And to say the least, it is going to be a 5 out of 10. Now internal liquidity being taken out, that's like straight up a 1 out of 10. Okay, because you really are just looking out for a 1 minute low in that case, because we want to trade higher being taken out, and from that point on you just want to trade onto the upside. And then the movement is basically going to be I'm gonna actually give it a 2 out of 10. Okay, so the most important part basically relies in the range high or low. Can you imagine, like, you are just looking out for 2 levels basically, and this is already the hardest part of the strategy. Okay, this is the reason why I wanted to emphasize on it to begin with like a scale. Because the hardest part about this entire strategy is identifying, okay, well, we are probably going to go for that low, or we're going to go for that high. In that case, we're going for that high. So that's pretty much already the strategy. Now with movement specifically, I meant movement candle. Okay, now this can be called your market structure shift, your whatever it's going to be. You know, people like to make it very complicated. They like to put their own labels on it. For me, I just call it what it is, a movement candle. I don't call it, you know, a market structure shift. That is not wrong to call it this way, but I just like to keep it rather a little bit more simple. And that's pretty much it, all that we're looking out for. I'm gonna make this a little bit smaller, and we're going to be having this basically here the entire time. Now, I don't know for what reason, but TradingView removed, for whatever reason, man, anchor text. You know, I don't know if even some of you guys remember that, but back in the day you had anchor text. Anyways, so we are waiting out for one low to be taken out. At this moment in time, it can even be this low. Okay, now here it can become a little bit discretional, because this low is very nearby and it's a little bit meaningless if you want to like that. This low, on the other hand, it has traded into a 1 minute FEG. From this point on, if we're going to be taking it out, this is clearly going to be somebody has put their stop losses below this candle low. Well, because it has basically rejected off from an FEG. So if we're going to be taking it out, people have been liquidated, movement candle, and we're going to be taking a trade onto the upside. Most of the times what you're going to be seeing happening is not going to be as fast. So before we're ever going to be doing something like this, we will be trading lower basically, taking out that low for example, and then you're just going to keep on trading lower and lower. You're going to be having some fake outs which are not going to be a movement candle, so therefore they don't count. Then trading low, and eventually you're going to be having your movement candle. That's a sign we're going to be trading onto the upside. See, it is very important that you're going to be having an entire framework and also the higher time frame bias aligned. Because if you don't know where the higher time frame is going to go, then you're basically trading blindly, and trading blindly is not a good thing, man. You have lost a lot of money doing it this way, and not even because you didn't know enough, but you didn't have somebody who told you, okay, look out for X, Y, Z for 1, 2, 3, 4 simple steps. Now, I have given you all of these 4 steps, but the question is, are you going to be able to execute it yourself when you are by yourself and do all of that stuff? Okay? Because when I coach people, most of the times they come at me and they already know a lot of the stuff. Okay? I am willing to basically start all the way from zero. This is basically what my entire one-on-one coaching is for, but they are basically coming in with a lot of experience themselves already, and what they mainly are looking out for is the guidance, okay? The accountability, me reviewing and also watching their trades, okay? And this is, like, by any means, this is not going to be any sell to you or a pitch whatsoever. What I want to tell you with that information is that you need to have somebody that keeps you accountable, okay? Whether that's going to be me, whether it's going to be your brother, whether it's going to be your grandma, it doesn't matter. But you need to have somebody that keeps you accountable to actually stick to those things. Because I've just shown it to you, and in a couple of minutes, we're also going to be taking a trade probably. Okay, I am laying down the field for you. I show you the map basically. So when you're watching this video, then you're going to be having all of these different things, okay? Now, I don't have like something nearby, but I'm basically giving you the map, like here. This is going to be the map. But the question to you is, are you going to be able to execute that entire map? Just like I have shown you. That is sort of the question that you want to ask yourself. Because it's the same basically with, you know, we're having the World Cup right now. Take Ronaldo as an example. Ronaldo, you know, to some, he's the greatest player alive. But undeniably, what you can say is that he's pretty successful, okay? Now, the question is, if he's going to basically give you the exact same roadmap on how he got to this point, are you going to be able to do it? Okay, this is going to be the question to you. Probably not, because there's more things to it than just basically executing these things, okay? And Cristiano Ronaldo also had a coach, basically, like a training coach in that sense, when playing football in that sense, when he was training. And by any means, like, a coach can be anything. A coach doesn't even have to be a person. A coach can be your trading journal that you're going to be looking at and basically holding yourself accountable with that. So it doesn't even have to be like a person, you know, manually sitting down with you. Okay? That is like the ideal scenario. This can also just be a friend, but this is really what it matters and what it comes down to at the end. So what we're having right now, we've taken out that entire low. We're seeing some movement onto the downside, and this is a classic manipulation example of the market. When you're going to be watching this price action, a lot of folks are now just going to be trading onto the downside because they believe that, well, it's a sell-off, okay? They're just going to see a rather big movement, which only 1 minute this is, you know, big movement. Remember, like the last episode or in the previous episodes in general, I've told you have to compare everything to what has previously happened with the price action, okay? So you're going to be having all of these different components of the chart, okay? You're going to be having your pullback, then higher up again, and you know, basically your pullback, higher up again. And comparatively, all of this price action is way much more than everything that we have seen so far very recently. So it is quite substantial that we're going to go onto the downside. However, the question is it going to be the right time to now take a short? Probably, maybe, but not for me. Why? Because I've just shown to you, I have a very clear defined rule-based system that I'm looking out for. And as long as not every one of those has been check marked, okay? So like literally, okay, this one checked, this one checked, this one checked, this one not checked. As long as not every one of those has been checked, then I'm not going to be taking a trade. Okay, this is really how easy it is. And I am even going to, so it's more simple for you and better to identify, I am going to pull up even emojis just so you can see it. Okay, just, you know, for anybody that is basically just skipping all the way until this point, I want to show it to you just so you really know what has been checked and what hasn't been checked yet. Okay, so check mark, and then we also need a cross, because visualizing all of these things is also an important part, because this way you're not only basically telling it to you, okay, like I want to basically not take a bad decision, I want to stick to the plan whatsoever. That's like one good thing. But if you're going to be able to visualize like that, then you're going to be way more likely to sticking to the plan, because now it's not only words, it's not only a sound coming from my mouth into my ear, or from my mouth into the microphone, into my PC, into my recording, and then, you know, having all of that into the editing software and then on YouTube, and then now you can listen it through your ears. That was a very complicated way of saying that, but you get my point. All of a sudden, it is not only going to be words that are being spoken, but now it's going to be, well, I can visualize it, I can see it. Okay, now the next thing would be feeling it. How are you going to be able to feel it? Well, there's going to be two ways. Potentially, you could even just mark it down on a notebook, on like a piece of paper, so that way you can also feel it. But what I do believe is going to be more effective is if you're going to be able to basically feel it whenever you're going to be getting the consequences, because you have already felt it. Okay, when you have not followed your trading plan, and it doesn't even have to be this one, when you have not followed your trading plan, then guess what? You have felt it. You didn't only see it, you didn't only hear it or tell it to yourself, but you have felt it. Okay, and this is basically the last component that we need to fix in order for you to start winning and basically end this entire cycle of losing and losing. Now, another way to basically end that entire frustration and suffering of just keeping on losing is by, once again, having somebody who reviews your trades. And no matter how much I tell these people how important it is to basically journaling your trades, because once again, accountability is not only going to be a person. Accountability can, if you're going to be looking at a spreadsheet, okay, this is already going to be able to hold you accountable. That is why it's so important to journal the trades. Now, journaling trades as a whole, you're not only journaling trades because now at the end of the month you can review your trade library. Which, speaking of that, we can look at my trade library real quick. All of the trades that we have taken over the past few weeks, they have also been documented on this entire channel. Okay, this is going to be my trade library. And it looks pretty cool. It looks pretty clean, as you can see. But that is not the reason why I am journaling, of course. The reason why I am journaling is because now I have something to look into and also be basically confident when I see this entire thing. And by the way, we're doing this one micro challenge right now. I need to create an entire new journal for that. We're going to be doing that very soon. When you're basically having this entire trade library that you're looking out for, you're holding yourself accountable. So if I took a loss in here, which, by the way, like as an example, if you're going to be taking a loss, which shouldn't have been a loss, but it was a loss because you didn't follow your rules, well, then this is going to hold you accountable. But if it was a loss, okay, that this is without a doubt going to be a loss. There is nothing that you could have done better based on your strategy, not just based off guesses, based on your strategy. This is going to end up in a loss. That's a different scenario. That's the truth. So that way you're going to be basically holding yourself accountable, because now all of a sudden I see a loss that in reality shouldn't have been a loss if I did everything correct. Okay? And you basically see where this pattern goes. It is always going to be about accountability and being able to follow your system. Okay? No matter what's happening, you always need to follow it. So currently what do we have in this price action? Big move onto the downside. Okay? Let's look at all of this on the 15-minute time frame. On the 15-minute, this is going to look like big rejection. And it is, to be fair, big rejection. We're currently sitting at this FEG. Let's see if we're able to basically hold that entire FEG, or if we're just going to be continuing on to the upside. Now the question is, are we going to be able to hold it with a body closure? Because there's a big difference. If it's going to be looking like this, okay, and it's just going to stay like that and now trade onto the upside, that's okay. But if it's going to trade below that and create a body and then have a wick even lower, then that just means that the FEG has failed you, and you would rather want to wait a little bit longer until you're going to be taking a trade. There's two things that I love seeing though. The first one is going to be that we have a BPR in here. Okay, a BPR is basically two FEGs that are overlapping with each other. Now, but the next thing is also going to be this wick is quite small. Okay, I pay attention to body wicks, bodies, you know, to the wick high, to the wick low, to the body open, and to the body close. Okay, this is basically going to be a very basic theory basically about trading. Okay, you already know that. I'm not going to bore you with that, but basically I like to look out for if the candle wick is quite low, because that indicates to me that we're going to be trading higher into it. Combine that with the BPR, you basically have two different confluences why you could be trading onto the upside. Now, but if it's going to happen right now, then we're probably not going to be able to catch an entry. If it's going to trade lower into here and then have sudden movement onto the upside, that's like the perfect scenario. That's exactly what I want to see in that case. So we are just going to be patiently waiting this out, and I'm going to let you know whenever we're going to be seeing something interesting in that sense. Okay, so right now we are trading onto the downside. Like, I'm gonna show you only 1 minute time frame. We did not really have something to base it off from. I mean, the most, like, the closest what you could call a movement candle would be this one, but in this entire price action, I was just like literally watching something while I was looking at the charts. Yeah, that's also what I recommend. Don't be so fixated onto the chart and just keep on looking and keep on looking and keep on looking. No, like, do something instead, but also that doesn't basically take your attention away fully. Like, if you're having, you know, I have a second monitor, your stuff basically going, some kind of video or something, that's cool. But if you're playing games or something like that, no, like, that's too much of a distraction. Okay, you can even be on the phone, because for some reason people like to make themselves or put themselves out there on the internet more disciplined than they actually are. Okay, and being on the phone while you're trading is not a discipline issue. It's only a discipline issue if you're basically supposed to be doing something but you're not doing it because of the reason, you know, being on the phone whatsoever, then it's a discipline issue. But if it's not that case, then it's also not a discipline issue. Now, basically, I would like to trade this onto the upside. Let me see. And although it looks like right now we're just trading onto the bottom of the ocean, I know. Okay, we've traded into that FEG. That is, to be honest, a point for me to take a trade. We have traded into that. And yeah, so if you're going to look at it this way, if this candle is going to close something like this, then only 50-second time frame, this is going to be a movement candle. Now, but let's just see how this is going to develop. You can even take a very small scalp onto the downside. Might I also do that? Give me a second to the side. 15-minute time frame. Okay, that's going to be 1 minute. Now I'm open taking a long in here. This is just going to be a very quick one. There we go. It's going to be our long. We'll be pushing all the way higher into potentially that candle high. So let's see how this develops. I mean, it would be quite amazing if this is just going to be a very fast one. Because also the reason many traders just misunderstand is that, let's just say that this is going to hit a take profit or a loss whatsoever. Then I have been looking at the charts for, I think it was like 1 hour at this point. But the actual trade, or the amount of time that the trade is running for, is basically 1 minute. Okay, I'm gonna wait this candle out. Okay, I'm gonna give it a little bit of more chances. Okay, we're basically increasing it. I'm gonna wait this entire 1 minute out. Stop loss already at break even. If it's going to trade lower, then we will not basically take a loss. Okay, we're trading higher again. Okay, and now I'm getting out of the position. There we go. That's how easy it really is, guys. We have been waiting for the charts for like an hour or so, and the trade itself has only taken us less than 1 minute. That's how trading looks like, okay? You're not trading most of the times, but you're waiting patiently for a setup to form. Okay, that's professionalism, nothing else. Now we're basically going to be journaling our entire trade as usual. We have done a good day. Of course, you could have held this and whatsoever, and you're the best trader in the world, and yeah, I get it. No, I'm a professional. I like to basically take what the market gives me. I don't like to over exaggerate it, basically. Okay, let me quickly take a screenshot of all of this. There we go. Paste it in. Beautiful. You could even say like extra sharp. It doesn't really correlate. If it's to the right, then that doesn't mean that it's better. If it's to the left, then that doesn't mean that it's basically worse. You get the idea. So let's basically journal this entire thing. This is going to be the entry. This is going to be the stop loss. It's going to be take profit. There we go. Now from this point on, there's basically, we have followed all of the rules whatsoever. We literally had the checklist. I mean, I have drawn it out to you, the entire checklist. Come on, man. And this was like quick $100, I believe. There we go. So this is going to be day 3, I think, that we have basically taken a one micro trade with. And yeah, journal's looking beautiful. I mean, that's just the overall one. You know, this has just been going for a little bit. There's a new journal that I've basically done. Let's go to the trade library, and as you can see, we have journaled the entire trade. Now I have to add it to the to only that one journal. So yeah, on the screen right now, you can also see the video on my main channel and how I'm executing the strategy, and it goes full in depth. Okay, not only having, you know, this live trading session, which is also pretty valuable, but there's going to be the full explanation, you know, very structured, and it's basically the entire video about it. Okay, make sure to click on it, and remember, guys, trade based off data and not guesses.